Hello everybody, it's Yashar here, back again with another video. And in this video, I'm going to quickly update you on recent changes in our stocks portfolio. In addition to portfolio update, I briefly show you the list of the stocks that I don't own currently, but I want to own at some point in future. We'll discuss their valuation briefly. And finally, I want to show you the upcoming earnings report of Canadian companies that I will cover on this channel. The dollar figure of my own portfolio at the moment is close to $77,000, almost $75,400 in Wealthsimple, and $1,500 in National Bank brokerage account. And our combined grand portfolio of me and my wife worth a little bit over $96,000 today, which is again a new record for our stocks holding in terms of the dollar value. We have a lot to cover in this video, so let's jump right into this. I first just want to start with the new changes in my own portfolio. My TFSA, where I hold all of my Canadian stocks, did not change at all during the last 2 weeks. I held everything and didn't really have any transactions in this account. However, my RRSP had quite a lot of transactions in the last 2 weeks. I recently published this community post after Meta earnings report and mentioned that I probably want to trim my position in Meta as the stock is now recovered completely from $88 per share to $240. We had a huge exposure to Meta, and I believe the stock is now fairly valued. So it was the time for me to reduce our exposure, and therefore I sold all of my Meta shares on Thursday. My wife still has all of her shares in her own TFSA, and her position in Meta is actually a relatively large position for a combined portfolio. As you can see, she's up 58% on her position in Meta, which is great. She will keep all of her shares, but I personally sold out of Meta to rebalance the portfolio. I bought 5 more shares of Google on Thursday morning when it was close to $103. I bought 2 more shares of MasterCard and 7 more shares of Amazon. Now, if we look at the overall portfolio asset allocation after these changes, we can see that Meta is no longer our largest position, and Aritzia is now the lead position in our portfolio. We have a concentrated portfolio with 14 different stocks. The stocks in this portfolio are Aritzia at 16% weighting, EQ Bank, our second largest position with 13% weighting, Meta is now the third position with 13% weighting, Brookfield is the next position with 12%, TD 11%, Google 10%, and Granite REIT with 8% weighting. Amazon and MasterCard are next at 4% weighting, and then we have 5 smaller positions, Killam REIT at 3%, Canadian Tire at 3%, and then Bank of Nova Scotia, Louis Vuitton, and Alimentation Couche-Tard at 1% weighting each. As you can see, I still have $4,000 ready to deploy in US or international stocks inside my RRSP account. While there are many stocks with great valuation in Canadian market at the moment, it's really hard to find US stocks with good valuation at this point in the market. October 2022 was easy time to deploy capital into markets, but now it's much more difficult. I want to show you the list of the stocks that I don't own currently, but I want to own at some point in future if the valuation of these stocks changes and becomes better. This is my buy list on Yahoo Finance. I skipped the Canadian stocks here, but let's look at US and international stocks in this list, which I like to buy them in the future. The first stock in my list is Eli Lilly and Company. You may not know about this company, at least by its name, but this is a great and amazing research and development business in healthcare sector, which developed various critical drugs like insulin drugs, as well as drugs for cancer therapy and depression. It's just an amazing business with sky-high business moats. However, let's look at the fundamentals of this business first. Price to earnings of 62. Oh my God, more than double the market average. Price to cash flow of 56, almost double its historical value, and a price to sales of 12.9, which is again almost double its historical value. You don't need to perform a discounted cash flow or DCF on this one. It's optically super expensive. Even by looking at this number, it's super expensive. I love to own this business in future, but at these valuation levels, it's a hard pass for me. I would just observe the price action of Eli Lilly and Company in future, and will hope for better valuations to jump in. The second stock in this list is that I'm watching right now is Costco. I like to own Costco in future. I think this is an amazing business, and I have $4,000 available, but this one is also just too expensive. Without using DCF calculator, it's just optically expensive, like Eli Lilly. Not maybe as expensive as Eli Lilly, but still expensive. Price to earnings of 37, which is well above the market average and even higher than the 5-year average of Costco itself. Price to cash flow of 23, which is higher than the 5-year average of 21. And price to sales of 0.95, which is again higher than the 5-year average of Costco. I like Costco, but my issue is with the valuation of the stock, which is still not there for me. Next stock in my watch list is the good old Microsoft. I used to own Microsoft as my largest position before buying our house, basically my old portfolio, and before starting this new portfolio. So this is also one of the stocks that I like it a lot, and I made a lot of money with this company in the past, so I have good memories. Unfortunately, it also has the same valuation issues. Price to earnings of 33, which is well above the market average. Price to cash flow of 27, which is higher than the 5-year average of Microsoft, and price to sales of 11, which is 10% higher than its 5-year average. It's just too expensive. The next stock is Hermes International, which is a European stock with a company HQ in Paris. Hermes is probably the most luxurious bag and clothing brand that you can find anywhere in the world. Because they can charge anything they want for their products, their profit margins expanding like there is no tomorrow. And this is another business that I love to own at some point in future. The current valuation of the stock is just out of this world. Price to earnings of 61, price to cash flow of 49, and price to sales of 18, which are all above the historical average of this stock, and of course much higher than market average. The next stock is Ferrari or Race, which is also a European stock with a company HQ in Italy. Similar to Hermes, they can also charge whatever they want to sell their luxury cars, and therefore profit margins are amazing. I love to own this stock someday, but again, the valuation is just not there for me at the moment. Price to earnings of 49, price to cash flow of 32, and price to sales of 9. The next stock in my list is Tencent Holdings, which is a Chinese company, but with a global footprint. In China, they own a lot of core popular applications and platforms like WeChat and Tenpay, and they have a major stake in a lot of Chinese companies like Pinduoduo and Bilibili. But I just want to mention a few of their international investments, which may be surprising for you. Tencent owns 40% of Epic Games, which is the studio behind successful games like Fortnite. Tencent owns 100% of Turtle Rock Studio and Riot Games, which are the studios behind successful games like League of Legends and Left 4 Dead. Tencent owns 10% of Ubisoft and 5% of Paradox Interactive, which are also two large gaming studios in Europe. Tencent also owns 20% of Sea Limited, which is an e-commerce business, digital payment processing company like Amazon and PayPal in Singapore. Tencent also has a stake in a lot of other companies. So some big companies that Tencent has a stake in are like Discord, Roblox, and even Tesla. So this is also another stock that I love to own, and actually it has a very good valuations in sharp contrast to previous stocks that I showed you before in this video. Price to earnings of only 15, price to cash flow of 20, and price to sales of 5, which are all below the market average and also below their 5-year average history. So it's actually not expensive at all. However, this stock has significant geopolitical risk. If you factor that risk into the equation, you will have a high risk, high reward stock. I may be interested in taking on this risk if the upside potential becomes a bit more with Tencent. For example, if the stock drops to mid-30s again, I will be probably a buyer of Tencent at that point in time. But not today. Last stock in my list is Taiwan Semiconductor. This is another amazing business in semiconductor and chip sector, which fabricate all the chips that we use in our electronic devices, including graphical processing units designed by NVIDIA and AMD. Like Tencent, it's not expensive either, but this stock has the same geopolitical risks, and for that reason, I would only be interested in buying this if the upside potential is much higher than this. 60s is where I'm really comfortable starting a position in Taiwan Semiconductor. As I showed you here, I love to own all of these stocks, but they are either super expensive or they have high geopolitical risks, which means I should be just patient and wait for the opportunity to present itself to me. I'm not going to chase these stocks at these crazy valuations, and instead I will focus on the sectors and stocks that are undervalued or at least fairly valued today. Speaking of undervalued stocks, a lot of Canadian stocks are undervalued at the moment, and some of them have their earnings report coming up in the next couple of weeks. I prepared this graphical table which show you the upcoming earnings report of Canadian companies I want to cover in the videos. A few stocks that I will cover their earnings report are EQ Bank, which has an earnings report on May 2nd, Aritzia, which also has an earnings report on May 2nd, Killam REIT, which has an earnings report on May 3rd, Granite REIT, which has earnings report on May 10th, Brookfield Corporation, which also has an earnings report on May 11, Canadian Tire, same on May 11, and finally TD Bank, which has earnings report on May 25th. Let me know which earnings report you are most excited for, and if you want me to cover any specific earnings report outside these companies, let me know in the comment section below. There you are, guys. I hope you enjoyed the video, and if you enjoyed the video, consider subscribing to the channel to see similar videos. I will come back with the earnings report of Aritzia and EQ Bank soon, but until that time, I see you guys in the next video. Farewell.